Half an hour away from the opens in Hong Kong, Shenzhen, and Shanghai. You're watching the China Show. I'm Yvonne with David Ingles.
Good morning. Our top stories today. Investors await fresh stimulus from China, with the Ministry of Finance announcing a briefing on Saturday that's following the biggest stock slump onshore in more than 4 years. Now, equities across the region are gaining after a fresh record high on Wall Street. That has, of course, some crucial numbers on inflation out of the U.S. that actually may define the Fed policy in the coming months. And we are on weather watch as Hurricane Milton slams into Florida's west coast with warnings of torrential rain and a life-threatening storm surge. We're live in Tampa this hour.
Good, happy Thursday to you. Take a look at these markets, and of course, we're still dealing with some decent risk here this morning, just given that we did see U.S. markets notch, and the S&P 500 set another 44th straight record this year ahead of that U.S. CPI print. But the question still lingers on what to do with Chinese stocks. Now that we did see one of the biggest drops in about 4 years for the CSI 300 there, so that letdown, we'll see if that continues for another day. Take a look at this headline, though, talking about that Berkshire yen bond sale. So they're selling 281 billion yen in the biggest yen deal offering since 2019. Of course, this is fueling a lot of talk that maybe we could be seeing some more fresh Japan investments there. So certainly that's something we're watching out for in Japan here as well. We're seeing a little bit of upside when it comes to stocks, but look at the dollar yen trade here, right? So the dollar is basically, I think we were up some 8 straight days here. So you are seeing a 149 handle for dollar yen. Euro dollar is at 109 levels here right now. So we continue to watch that dollar strength and whether it does continue here, as you know, the market basically thinks a 50 basis point cut from the Fed is basically no longer a done deal for the year, not just for November now. Yields are now, the 2-year finally reached that 4% handle. We've been watching very closely here as well, and we are seeing that yield pick up across sovereign bond markets here today. Commodities are stabilizing a little bit after what we saw yesterday, which was the disappointment from the NDRC meeting and what we're seeing across Chinese equities. Iron ore is catching a slight bid. We're up 1.5%. Yes, that line you're seeing here right now, the timing of this is interesting. So we knew this was happening. We learned this a few weeks ago during that presser from the PBOC, but that swap facility, applications, all that are open today. So as they mentioned, it's 500 billion renminbi that is open right now. They're interested in increasing that further. So maybe I think it's the fact that they're doing this a day after we saw that big tumble yesterday is certainly quite telling itself. Maybe they're trying to add some more support to this market. You take a look at how China markets are doing here, futures and the like here. So the CSI 300 fell for the first time in 11 days. And then, you know, everything started kind of paring back a little bit better because what? We got that news. Ministry of Finance is finally having a briefing, but we got to wait till Saturday for that, Dave.
Yeah, and you got to wonder whether, well, one, they'll open markets on Saturday. I'm kidding. Whether we need to come in for work for Saturday. Hopefully not. It's almost like we're watching a mini-series of, you know, the Avengers for the market, right? You had the PBOC coming in. The NDRC was the cousin. And then you have the big one coming up in the Ministry of Finance, plus the PBOC swap. So we'll see what happens here. But certainly what's back to our point, to the point of our guest yesterday, is turnover is back and liquidity is back, right? So at least price discovery slightly better going into the open today. And again, the formula to the approach today is, again, futures called higher 3%. We'll see what happens as we approach the open today. Sector dispersion is interesting because you look at the biggest decliners yesterday. Industrials, for example, took the biggest hit. We had a story, and we'll talk more about this later. So in the U.S., there's a yin and a yang ETF. One is
named, really.
Well, yeah. Hopefully it was deliberate. And we're seeing record inflows into both, right? So bullish and bearish, and I think some of those are the inverse ones as well. We're seeing money come out of the junk bond space in China in favor of funding, I guess, the equity market rally. And in terms of data we should be getting at some point the next few days, we are in the window for credit numbers coming through. And I just fancy a guess, could come Friday evening, as it has been usually the case. in previous months or so. But yes, let's take it back to the top story, which is the PBOC, of course, Yvonne.
Yep, so announcing today accepting swap facility applications starting today for securities funds and insurance firms. And this really comes after the finance ministry announced it would hold that press briefing on fiscal policy this Saturday. For more, let's bring our China correspondent Min Lo on what we can expect from this meeting now.
Yeah. Well, this was the missing piece of the puzzle, right? We had the PBOC briefing and then the NDRC really disappointed. MOF is tasked with issuing bonds, so this could be the time when we finally hear that number, the size of that fiscal package and the composition of it. So economists are now expecting about 2 trillion yuan in new special sovereign bond issuance. Citibank had a higher estimate of 3 trillion yuan. The speculation is that these funding is going to be used to tackle local government debt, to boost domestic consumption, to fund urban infrastructure, for instance, and also to recapitalize the banks, which was something the PBOC said that they will do. But, you know, there has been really wild calls, extreme calls for some 10 trillion yuan in injections, which I think we're not likely to see. But some analysts are saying that just judging from what the PBOC had done, where they just announced 500 billion yuan in injection, followed by more of similar sizes to come, they're saying that we could see something similar with the MOF as well, to the tune of maybe 500 billion yuan, with promises of more, just because, you know, there's only so much you can do with the fiscal measures before you start to see some adverse effects coming in, right?
Yeah. Can you talk more about this, the swap facility that is taking effect today? I think, you know, we were having a conversation with Marvin Chen, our equity strategist, and I think he put it very, very clearly that, you know, when we get a 7% drop on the index like yesterday, immediately our minds go to, is the national team going to step in? And what he said back then was effectively the PBOC sponsoring national team support right now with this direct funding. So how big is this swap facility and what does this do moving forward? Yeah,
so the initial tranche is 500 billion yuan, although they have promised that they could inject a similar size injection later on if it's needed. So as you said, timing is interesting because we did get a bounce yesterday on the CSI 300 after the announcement that MOF is going to hold this briefing, but that optimism just quickly faded and you see selling off again in the later part of the session. And also remember, we were saying that Li Qiang was meeting with experts and academics to solicit opinions. I was reading a very interesting piece on Trivium China. The analyst was saying that the fact that they're soliciting opinion now could mean that the government is still trying to find the right policy mix at this point, which could be why we have been hearing very vague promises of more measures, but just lacking in details.
Okay, well, hopefully the details come. Min, thank you so much. Min Lo, our China correspondent. Futures are 3.2% to the upside going into the Thursday open today. It's the final trading session, by the way, here in Hong Kong before we go into a long weekend. Joining us here instead to talk us through all this information, what this means for market strategy, Louisa, China equity strategist at Bank of Singapore. Good morning, and it's nice to see you.
Good morning, David. Good morning, Yvonne.
Do you think market expectations are high? Maybe too high going into this Ministry of Finance briefing on the weekend?
I think market expectation has been building up, put it this way. And I think 2 trillion, like the amount that you mentioned, is now becoming like the consensus or like the starting point from, at least in the near term, to start with. Yeah.
Is it enough to keep this rally going? I'm just wondering, what do you need to hear?
I think, first of all, I think at the conference of the Ministry of Finance update in this Saturday, I think we probably would get some guidance. But I think what the market is hoping for, like if we need some kind of budget expansion, we still need the approval from the MPC Standing Committee. So that is likely to come in late October or early November. So I think we still have some patience to wait. But I think what is important, aside from the guidance, like the size that you've just talked about, is like the direction. Whether it's going to focus more on consumption, that will be the key. And then I think if you look at all the stimulus that the policymakers have been making, it's mainly focusing on investment or local government supporting them, which we do believe out of like the consensus expectation of the 2 trillion, probably a portion, maybe around 1 trillion, that need to support the fiscal funding gap. at the local government level. Now, with the remaining half, for instance, how are they going to split it? If majority is going to be spent or focused on consumption, that will be a good surprise for the market. And I think lastly is the forward guidance. Just like 24th of September, when the financial regulators, that was the first time that they gave the forward guidance, i.e. saying that there could be more reserve requirement ratio cut from now till the end of the year. And I think this kind of forward guidance will help the market to gauge maybe even the initial size or the numbers may not be live up to expectation.
Yeah, the clarity has, well, I mean, suddenly become more clear, and I think it's really helped markets raise their expectations of what a press conference should look like. One of the things they announced back then was this swap facility at the PBOC that's kicking in today. What do you make of that, this program? Do you think it provides short-term support to the market while we wait for the other numbers to cooperate and get better?
I think if you look at it, it's probably 2 weeks from the announcement since end of September, and it's already more or less in operations or starting to take application. I think it is a good move, signaling that we are putting the effort to implement. And I think what's the market or what has been struggling for Chinese equities investor is the policy implementation, right? When they mention something, and then you have to be patient and wait for it to be executed. And now we see this comprehensive, orchestrated move, not just by all the talks or conferences that we have, and now finally they put into move. Yeah.
In terms of what you think could be beneficiaries of this sort of stimulus, what are the key sectors to watch now?
I think if it's going to put into consumptions, or if the target or focus is going to fight to reflate the economy or fight the deflation issues. Overall, it will be positive uplift for overall economy. But I think from a consumption perspective, aside from the typical consumer names that you can think of, I think the internet and platform plays actually can be a proxy for the Chinese consumption. For instance, like all the e-commerce players, advertising spending will be another key focus. So I think internet and platform industries will still like one of the key beneficiaries. They are large, liquid, and also they are very familiar by many of the foreign institutional investors.
Okay, so if I had to pick an index, would it be Hang Seng Tech? Is it MSCI China? So longer term, is that the opportunity? And shorter term, what are the indexes that might present a better, if any, a tactical opportunity?
I would say two. From the offshore perspective, Hang Seng Tech Index will be one, because they are basically have a lot of the internet and platform companies that are in the offshore market. In the onshore market, I probably will focus on CSI 500. That's basically focusing a lot of more the mid-caps, because in the large cap space, there's a lot of the SOE banks and oils companies. They are good, but if there's a reflation that the market is expecting, they will be going for growth.
Yeah. How are you looking at valuations now? I think we had Morgan Stanley say most of these indices are already priced in that reflation that you mentioned. Do you think that we've normalized, or can we actually see valuations expand from here?
I would say valuation from two perspectives. First of all, yes, most of the indexes are trading back to the historical average. Exception will be Hang Seng Index and also the Chinex. However, if you look at some of the market rallies that are driven by policy swift or earnings driven, like the 2016 to 18 one, and also the post-COVID 2020 and 21, current valuation are still not yet there. So I would say valuations is normalized, but if there is fiscal measure follow through to do the reflation job, I think there's still upside. Yeah.
That takes us to the upcoming earnings season, and do you think it's premature to expect corporates to start improving or giving out better guidance, for example? And where do you think we'll probably see the initial leg of earnings revisions higher, if at all that's part of the conversation already?
I think 3Q numbers may not reflect what has happened over the past 2 weeks. The policies still need time to work through. But I think what matters will be the management guidance, especially from the sales momentum. I think one of the reasons why I like the internet and platform industry is that despite over the past 1 or 2 years, top line growth has been moderating or coming down, but because of the operating leverage, the size and scales, they actually did a good job in terms of delivering earnings growth, and at the same time, share buybacks in delivering shareholders' return. And I think if that reflation or the sales momentum picking up, they will have more leverage. Yeah.
Louisa, it's great to have you. Louisa Falk there, China equity strategist at Bank of Singapore, joining us here in Hong Kong. Of course, we're counting down the opens of trade in Shanghai, Shenzhen, Hong Kong. We are watching China futures there. Initially, we're popping some 3% here right now, so maybe we'll see. Is there any sort of sense of dip buying after what we saw, that 7% drop in the CSI 300 yesterday? Beautiful day out in Hong Kong. Happy Thursday to you. This is The China Show. All right, your RMB fix just crossing the Bloomberg here this morning, 707.42 against the dollar. It is just slightly stronger than what was expected here today, but obviously reflecting that, the initial renewed sort of strength that we're seeing in the dollar of late. I think we're slightly flat after 8 straight days of gains to the Bloomberg Dollar Index as well. But futures in China looking pretty there this morning. Let's look beyond that and take a look at what's ahead as well, which is that U.S. CPI print that's due a little bit later on, along with what we heard from those FOMC minutes overnight that basically did show that Jay Powell did face a bit of backlash over that 50 basis point cut there and was really hotly debated among committee members. Let's bring in our MLI strategist, Mark Cranfield. He joins us from Singapore. So, we're still talking about U.S. S&P hitting records leading into this CPI print. How important is this inflation data going to be later on today?
It certainly could increase that. As you were saying, there was a hot debate about whether it will be 50 or 25 basis points at the last FOMC. And if we get a high core number for CPI today, traders will be thinking that the debate this time round will be between 0 and 25, because already because of the very strong jobs number that we saw last week, people are already thinking it was overkill by the Federal Reserve in cutting by such a large amount. It doesn't look as though it was necessary. The American economy is doing pretty well anyway. GDP numbers back that up as well. So it really looks a little bit odd that they forced a 50 basis points cut into the market when the equity market is doing so well anyway, the economy is doing along well. Now you have these jobs numbers, which really puts question marks over it. So if the CPI core numbers are a bit on the higher side today, and certainly there's a chance of that because the numbers are stabilized at a low level, certainly, but they don't look as though they're cooling any further. So the risks are very much tilted towards the number being above expectations, that not being so good for the bond market. Equity markets seem to be able to take anything in their stride, and they're very focused on earnings. But what traders will be very interested in is the way it shifts the narrative for the FOMC meeting in November, because they're beginning to price in less than 50 basis points between now and the end of the year. That could easily slip to just 25 basis points, which means the December meeting is probably the one to deliver. We could be looking at a pause in November, which at the moment is not the base case, but that could change very quickly depending on today's inflation report.
Yeah, Mark, we know how quickly, to your point, how quickly these, the pricing around future Fed moves can change. And the tail risk, that it's not just November that could be at risk, but even the December move or price move out of the Fed. What do you make of that trade? Because that doesn't seem to be fully priced, at least the probability fully priced at the moment.
I think where it gets really interesting is after the US elections. Nothing that we've heard from either of the presidential candidates suggests that fiscal constraint is anything that they're very concerned. They're not going to be reining in the US fiscal deficit. In fact, if anything, both candidates suggest that they're going to be spending more and fairly quickly. So the outlook that investors can see is that going into next year, the US fiscal deficit is going to worsen. That's going to put upward pressure on inflation, upward pressure on long-term yields. The Fed will have to take notice of it. At the moment, the projections in the dot plots are for a series of more interest rate cuts next year. That will very much come into question when people get a better handle on what the next US president is going to do. It is unlikely that the Fed can step back and say, well, we're not concerned about this overspending on the fiscal side. We can continue to cut interest rates. There's going to become a meeting point probably in the first or second quarter of next year. If the Fed hasn't already taken a big pause, the fiscal situation will probably give them a very good reason to dial back and to say, look, we need to see how this is going to play out from an inflationary point of view. We need to really take our time. Rates are on hold for a while.
Mark, thank you so much. Mark Cranfield in Singapore for us, giving us I guess the potential road ahead here in terms of the U.S. CPI print. And you know what? Higher yields. Here we are. Again, aren't we? A couple of shares to tell you about going into the open today. Haitong and Guotai Junan. So we have more details now on this proposed merger in both. So as you can see, triple-digit gains as they resume trade today. There's the premium because of the deal, and of course there's a rally that's taking place while these things were shut.
They were shut for more than a month, right? I think since September 6th. And since then, these brokerages have basically rallied some 40% on these recent stimulus measures. So there's two things that's really propelling these stocks here right now. Take a look at that. Triple-digit gains for both those brokerages. We're plenty more from BI on their take on this merger as well, leading up to this. Plenty more ahead. This is Bloomberg.
Welcome back. Ahead of the Thursday open, so, you know, two-way volatility in this market has been just through the roof. You know, CSI 300 10-day vol, actual vol is actually, you know, back to 9-year high. So going into this long weekend, and, you know, today is the last day Hong Kong trades before that press briefing out of the Ministry of Finance. You do expect, you know, which way are traders going to bet? Massive move up on these leveraged bearish ETFs that are traded in Hong Kong. As you can see, the pre-markets were down. Watch this closely today on the back of potential hedges going into that weekend, even if we do get a rally. In fact, the volumes on Hang Seng China, for example, a chart's coming up just to show you how much volume has come in. It's just gone through the roof, right? So I think that's one to keep in mind ahead of, I guess, two full days of trading left, Yvonne.
Yeah, you know, we talk about how retail-driven this market might be. You know, the long-only funds, right? I think they're still waiting for things to calm down just a bit for them to actually see if there's a way that they can position or even chase this rally here right now. There you go. You take a look at the pre-market. Hang Seng is looking pretty good here right now. We're up some 2%. HS Tech, we're seeing gains of about 3% here right now. And we're watching, of course, what's going to happen when it comes to the CSI 300 after that biggest tumble of 7%. We've seen the biggest we've seen in 4 years. You take a look at how this is going to look, though. The brokerages will certainly be very much in focus. So we talked about Guotai Junan Securities, Haitong Securities. So what we're hearing from the terms of this proposed merger is that Haitong's A shares and H shares will be delisted and canceled after this proposed merger. So certainly we're watching more details of what this deal is going to look like, of course, for these two these two brokerages as well. We got the open coming up next. This is Bloomberg. Welcome back. You're watching the China Show. We're counting down to the open of markets. And really, after what has been a whipsaw in these Chinese equities, we're watching very closely for the near-term catalyst. So we got two, one being that the MOF finally is going to be having their own briefing on Saturday. Also, the swap facility opening up today and going into effect. So certainly, is that going to give enough support for this sort of rally that we've seen that really has seen a bit of consolidation of late, Dave?
Yeah, it is worth noting that, you know, that news dropped right as we were coming out or had just come out of lunch yesterday. And what we saw was, you know, stocks did come off the lows of the day. It wasn't enough to completely reverse the losses. And in fact, yesterday, 7-8% drop on short, which was the worst day since Feb 2020. If you remember, that's when the coronavirus and COVID hit mainland China first and foremost, and we did see a sell-off there, just in terms of historical context of the move yesterday. So far, it's looking like a normal day. 0.6 of 1%, 4,000 again is the level we're tracking here. Industrials just want to watch. The reason I bring that up is this really took the biggest hit yesterday. We were down 10% on the index yesterday. So what we've noticed is really a move out of cyclicals on days where we don't get new information on stimulus measures. So there is still a lot of headline risk out there. Our previous guest out of Bank of Singapore suggested that if there is a tactical trade here, it's the CSI 500, maybe the small cap CSI 1 in 2000, given the short-term moves. Longer term, it's still MSCI China, given the valuation melt-up. Turnover, obviously, still want to watch. We're still watching the brokers, of course. I mean, have we seen enough turnover? Flip the boards, please. For us to get a re-rating on the earnings outlook for some of these brokers, and we'll have more on this big broker story in a moment here. Hong Kong is up 3%, HS Tech 3.3% to the upside. Again, we're seeing a lot of moves coming through across the big names here in Hong Kong. We're watching as well short interest in some of these bearish ETFs and some of the hedges. The reason we have that up is simply because today is the last trading day in Hong Kong before we go into the weekend, and who knows what we'll get in terms of news. And have we already seen the bulk of the long-only funds come in and those flows coming in, really waiting for incremental information to chase this rally even further? Right. The big news out of Hong Kong separately was this big merger, of course, this proposed merger. And the 8 shares of the 2 brokers in question as part of the deal are resuming trade today. And as you can see, so there's an element of catch-up here because of, well, for one, the rally. Number 2, the premium. As far as the swap deal is concerned. So Haitong Sec 120% out of the gates, limit up on Guotai Junan, and also Haitong in the A-share market. Right. ETFs that chase the CSI 300, are we going to get state-backed supports on top of, obviously, buying from investors as well, given the chasing, of course, of the CSI 300? We're up across some of these index funds as well, ETFs tracking the index. And very, very quickly, what does an equity market do? A rally in the equity market do to other parts of the financial market? What we've seen is this spike up in yields, 13 basis points yesterday, which actually was the biggest one-day jump in yields on AA local currency bonds in about 10 years or so. So this has been collateral damage, Yvonne, to this equity market rally.
Yeah. What do we make of this sort of rotation, given that we are still seeing risk on across these markets and stock markets here today? We talked about high-yield bonds certainly still in focus. Let's bring in our China credit reporter, Loretta Chen. So I think some onshore traders were saying it was one of the worst sell-offs that we saw on Wednesday in a decade in these junk bonds.
Yeah.
What do you think is driving that?
That's right. I think it's one of the ways that the stock rally is really manifesting in other asset classes. You're seeing people who have been parking their money with these safe corporate bonds for years. They're moving out of the corporate bond market into risk assets. So you're seeing a lot of sell-offs. A lot of the investments here are retail-driven. So the retail investors have put their money into wealth management products that invested in the local bond. And now these wealth management products are actually facing huge redemption pressure because people want to take their money out in order to invest in the stock rally. I think the single day was probably magnified by the fact that there was a week-long holiday before that. And of course, the pressure's been piling up for these individuals trying to get more capital into the stock market. That's why you're seeing that single day big jump. I think we're hearing from analysts that they're expecting that as long as the rally in the stock market lasts, the bond market will continue to sell off, but the extent of those single-day moves are probably going to subside a little bit.
Yeah, because it was quite substantial when we saw that headline yesterday of 13 basis points, right? So, well, how expensive are these local currency bonds right now? Just to give us a sense of, will that really be the funding source for this equity market rally for retail investors?
Yeah, actually for this year, all of these corporate bonds have been rallying a lot. So credit spreads has really, really been tight for the much part of this year. And that big jump yesterday we saw actually brought back these bond spreads sort of back to a relatively more normal level. I think even a bit more widening that continues is just going to be sort of a normalizing process that we're seeing in the corporate bond market. I think overall it's a healthy thing for the China's market that's really been suffering from this loss of confidence for risk assets, and then now I think things are kind of rebalancing a little bit.
Okay, Loretta, fantastic. Loretta Chen there, our China credit reporter on these cross-asset flows we're seeing. Yep, so second, third derivative as far as the asset classes are concerned. So this equity market really is affecting many parts of the financial market.
Yep. Another story that we're tracking, of course, is what's going on in Florida and the Gulf Coast. You take a look at how Hurricane Milton has made landfall just a few minutes ago with powerful, powerful winds, as you can see from the cameras here right now, and basically slammed into the west coast of Florida near Tampa. With very forceful winds, pushing a wall of water onshore and putting lives at risk in a very densely populated region as well. So we're talking about winds of up to 120 miles per hour. That's according to the U.S. National Hurricane Center. And that makes it a Category 3 storm on that scale there. So, and of course, we were just talking about Hurricane Helene, David, just 2 weeks ago in Florida.
Yeah, on top of that, too, like, I'm glad you brought that up because we had that one a few weeks back. We had this monster one that just made landfall about an hour back. And they're actually monitoring another weather system that actually might, it looks like that might form into something. But I guess before we talk about that, let's get a sense of, what the situation is really on the ground. Let's bring in our ABC News reporter, Jacqueline Lee. She's live in Tampa Bay for us. Jacqueline, David, and Yvonne here. First and foremost, thank you for joining us, and hope you're keeping dry and safe right now. Can you give us an update just very quickly of what you're seeing and feeling right now on the ground?
Yes, David and Yvonne, it is very wet. We are in the thick of the hurricane right now. And the reason I keep looking over here is because the wind gusts are so strong, there is concern about projectiles. Any debris that is outside, it can go airborne and it can fly this way, just underscoring the dangers of Hurricane Milton as it goes through. There's more than 160,000 people without power currently here in Tampa. Guys.
Jacqueline, can you tell us a bit more? I mean, this is, how is the state prepared for this? This was just about 2 weeks later after Hurricane Helene. In terms of evacuations, I know there's been millions that have been told to leave their homes. And what do we know about the costs that might be involved this time around?
Exactly. So it's a 1-2 punch, dealing with Helene and then dealing with this back-to-back. Officials have really emphasized for Hurricane Milton that people needed to evacuate immediately. So for the last several days, they kept pushing people either to evacuate, fly somewhere else, or drive north. What we saw in the last 24 to 48 hours is people who decided to drive. There were long lines at gas stations. Many of them were out of fuel. So Governor Ron DeSantis brought in fuel tanks overnight to restock those gas stations. We spoke with people who were at the airport getting rental cars to then drive further north, going as far as Atlanta, Tallahassee, just trying to get out of the storm's path. Now, the huge concern is the storm surge. When you're looking up to 13 feet of storm surge, if you're in a single-family home or in a mobile home and you're dealing with conditions like this, when you have no power, that is very scary, guys. So this is a life or death situation.
Jacqueline, thank you so much for bringing that update for us. And yes, as we say, please stay safe and dry as you can, but bringing us that live coverage there out of Tampa Bay. Coming up, TSMC posting surprisingly strong quarterly revenue and easing concerns that AI hardware spending is beginning to taper off. Not quite just yet. We got details coming up. All right, we're checking these chip stocks here today. TSMC, I mean, it's shut because Taiwan's on a holiday here, but certainly we did get some pretty good numbers when it comes to sales in that September quarter. So certainly it's leading to a mixed picture across some of these big tech names, but you are seeing gains in SK Hynix here this morning, a 4% SMIC. I mean, the chip makers in China doing something else and focused on a lot of the fiscal policy measures and the like, too, as well. But yes, chip stocks are recovering overall here today. NVIDIA, there seems to be some renewed sort of optimism that we might see in the FOMO trade come through here when it comes to that whole AI theme once again as well. But let's focus a little bit more on TSMC. So posting better than expected sales in the quarter, easing concerns that spending on AI hardware is fading. Let's get to our Bloomberg Intelligence senior tech analyst, Masahiro Wakasugi, joining us live from Tokyo. So Masa, what are the major takeaways from these sales numbers?
Yes, TSMC's September revenue was the actually second highest as a single month revenue, so that was good. And TSMC's top customers include Apple and also NVIDIA, of course, and followed by Qualcomm or Broadcom or AMD. And we think that the demand from the AI chip customers should be fine. And also now it's production ramp-up season for new iPhones. So far the production for iPhones should be good at this point. And for the next week, TSMC will report earnings, and they will explain the situation for the capacity expansion plan for the GPU packages. And it is said that TSMC's GPU package supply, that's called CoWoS, a chip on wafer on substrate, is a kind of a bottleneck. So one of the focus in the next week's TSMC's earnings call should be its updated plan for the CoWoS capacity expansion.
Yeah. The market watches these numbers out of TSMC very, very closely, given how important, well, to your point, the company is really in this entire global semiconductor supply chain. What are the implications at this point that you suspect for other tech companies?
Okay. Right. So, of course, the solid revenue for TSMC is good for the suppliers, of course. And we think that TSMC will keep the high capex for this year as well as next year. So the company says that its capital intensity, which is the capex to revenue ratio, is 35% for a while. So meaning that its capex should be good for the suppliers, including ASML or Applied Materials and Tokyo Electron Lam Research. And next week, ASML and also Disco, which is one of the supplier for the chip equipment, will report earnings. So I think that next week we may hear good earnings or maybe a positive comment from these companies which will report earnings next week.
All right, Masahiro Wakatsugi there. Thank you so much, our Bloomberg Intelligence senior tech analyst there in Tokyo for us. Right, let's say somewhat on the Taiwan story. Taiwan President Lai Ching-te is preparing to use his first National Day address in a couple of minutes, in fact, here to maybe sound the warning about China's alleged tactics against the island. Beijing is set to hold, of course, military drills that will coincide with an upcoming speech. Keep in mind the backdrop here is, of course, he took office, I think, back in May and a couple of months ago. It's the first one. And just to get a sense of what are you watching here that he might give us a significance?
Yeah, it's his first National Day speech, so certainly one that we're watching very closely, given how Taiwan has been caught between, of course, these crosswinds of U.S. and China tensions of late. What we're hearing so far, the Defense Ministry in Taiwan, they detected 20 Chinese aircraft, some of which did cross the median line of the Taiwan Strait, in conducting some of these air-sea joint training with Chinese ships. So we might hear him maybe talk a little bit more about that and maybe sounding that pressure, as you say, on China. So certainly that's one to watch. On the back of all that, on top of that, we have to watch these markets that's happening. What are you watching out of China here right now? Yeah, well, this continued whipsaw, really. Two-day or two-way, actually. Two-day and two-way as well. I think both apply today. Vol, it's just extremely intense. Yeah. I mean, the CSI 300 was up 5%. Down 7, we're up 2% right now. So 10-day vol on that specific index is now at the highest in about 9 years or so. Encouragingly so, is we are getting buyers coming back in and buying yesterday's dip. I think it's a lot more pronounced, which might speak volumes on how people feel at this point and level in the rally about what we might get on the weekend, because Hong Kong trades for the last time today before the weekend, and you're getting the bulk of gains so far coming into Hong Kong, as opposed to China, which of course has another day to anticipate anything on the weekend. And Bank of Singapore's Louisa just mentioned, right, when it comes to valuations, yes, most of them have basically are back to normal levels. But if you look at HS Tech, for example, I think UBS's Eva Lee also mentioned that HS Tech, Chinex, we're still not quite there in terms of hitting those averages. So certainly there might be some more runway for Hong Kong in particular as well. Maybe that's why you're seeing HS Tech still up some 3% here right now. You're watching the brokerages as well. We talked about that merger, resumption of trade, Guotai Junan. But it's really sending all these brokerages a little bit higher. on the back, with the exception of Haitong Securities and SCES Financial.
Oh, by the way, we're trading already.
Yeah.
Yeah, there we go. Right.
But yes, it's not pre-market anymore. Got to take away that headline.
Triple-digit gains, in case you missed it, at the resumption of trade for these two brokerages. Anyway, live TV, folks. Why not? Plenty more ahead. This is Bloomberg.
Well, Tesla is taking the wraps off its long-delayed robotaxi later on today in a high-stakes presentation for the EV pioneer. And Tesla's new product may also face some tough competition in China, where self-driving taxis have moved beyond trials and onto public streets. Our chief North Asia correspondent, Ingles, reports from Beijing.
Already dominant in their home market, Chinese EV makers aim to lead as well in the self-driving realm, from advanced robo-taxis to larger semi-autonomous semis.
The game for autonomy is in China. That's why Elon wants to roll out his own FSD there.
Tesla, along with its Chinese navigation partner Baidu, plan to make FSD, or full self-driving, available in China by as early next year, pending final regulatory approval, after getting an in-principle okay from Beijing in April.
It's a watershed moment, and this unlocks a golden opportunity.
At least 9 domestic Chinese automakers, plus smartphone giants Xiaomi and Huawei, among others, have a head start, though, locally through real-world traffic pilot zones in multiple cities across China, seeking a leg up in so-called ground truth data.
At the moment, the local knowledge gives them the advantage because, again, the scale. The scale is uncompared to anywhere else in the world. But as Tesla leans on that scale, as you mentioned with the Baidu cooperation, that is slowly going to be eaten away over time. And unless they can also do that kind of data gathering outside of the country, Tesla will at some point not only become competitive, but may ultimately become a market leader.
I think Tesla's full self-driving is great. I like it too. But FSD's breakthrough only took place in the past 12 months. I think XPeng's XNGP and Tesla's FSD can both perform well in the global market.
Tesla is indeed a pioneer, but everyone is beginning to get closer. Chinese car companies have a better understanding of the needs of Chinese users and the needs of China's road conditions.
This is a pretty narrow road. You can see all kinds of different scenarios like bicycles, pedestrians, vehicles cutting in, cutting out.
Toyota partner Pony AI has been real-world road testing its robo-taxis for more than 6 years. So we hailed a ride in Beijing.
Tesla's FSD coming into this market, is it a threat?
It's definitely a good thing. More competitive this market is, it means the better products will be offered to the customers. We need to have the customer acceptance. That is very, very important. The customers have to trust this kind of technology.
Oh, whoa.
Wow, what happened?
Somebody pulled out suddenly.
Oh.
The brakes work.
Safety and certainty are clearly important as well for another electric vehicle industry in China in the so-called low-altitude economy that includes airborne EV delivery of packages and passengers. Yihong is perhaps the most well-known of the Chinese air taxi makers, but Volant Aerotech 2 hopes to have its $2.5 million VE25 certified by mid-2026 as China opens its lower airspace to piloted and pilotless eVTOLs, or electric vertical takeoff and landing aircraft.
There's a huge potential in this area.
Electric vertical takeoff and landing commercial drones come in many shapes and sizes, and they are throwing lots of money at it.
So much so that at least 20 provinces say they intend to build out their own low-altitude economies.
The vehicle itself is carbon fiber, and it's generally produced all domestically. The battery ecosystems which they use are here. So all of the ecosystems and manufacturing is already located domestically. So that actually gives it a huge edge over any competitors.
Now is a little bit challenging time between China, Europe, and the States. I think it's important to have the communication and not afraid of everything. We are trying to build this aircraft for the world.
The next real test for autonomy, both in the skies and on the roads,
It's slowed down.
will be to see whether customers are afraid or not to get on board. Stephen Engel, Bloomberg News, Beijing.
Now, for a check of markets, we'll start things off with just a pocket of movers in Australia. Lithium miners, and of course the big deal, in case you missed it, was Rio Tinto and Arcadium Lithium, all cash, $5.85 a pop. Shares resumed for the target or the acquired. You're seeing, of course, a pickup across the space here. As you can see, 8% for Sayona Mining. It's a penny stock, so obviously you'll get unchanged, but that's a decimal point story, 40% there. On Arcadium. The macro story is the S&P at a record, and this recent pickup in the U.S. dollar, well, the Fed, I mean, it's a cut at risk, has really driven down the legs of the euro, which is actually now trading right at about the 100-day moving average. That's the next support you want to watch out for as far as the euro is concerned.
Yeah, and the 2s and the 10s in the U.S. Treasury curve are basically back above 4% here right now. So the key question is, are we going to see some renewed upsized risk to inflation in the CPI print after that blowout jobs report, right? So core CPIs are still expected to be about 3.2% year on year. Bloomberg Economics still thinks that number might still quite be high compared to what you're seeing in the headline CPI numbers, of course, as well. But there you go. Hang Seng still doing quite well. We're seeing gains of more than 2% here in the city before they shut for holiday tomorrow. This is Welcome back to the China Show. Here's a look at the CSI 300, just a half hour into session, and we are basically swinging here and now erasing earlier gains of as much as 2%. So we're still above water, but still, I think still a lot of nerves out there. What we saw yesterday, there, that big drop of 7% on these onshore equities here, the biggest tumble we saw in 4 years. So I think right now we're still wondering whether it's time to buy this dip, I think, and Hong Kong at least doing a little bit better than what we're seeing in Shanghai right now, Dave.
Yeah, before we go into the long weekend, which I guess speaks volumes too on the amount of risk appetite out there, that you could sit out 3 days and still happy at these levels. It is early days, of course, just about 30 minutes into the session, and as Yvonne is pointing out, right, we've already counted 5 direction changes on the CSI 300 30 minutes into the session. Broadly speaking, we're looking at it pays to be bigger today. As you can see, some weakness coming through on the small cap benchmarks like the CSI 2000. You are getting a bit across some of the materials plays as well, and cyclicals are coming back today, outperforming the overall benchmark. Right, so we're barely 30 minutes into the session here, and turnover is already onshore, very close to the year-to-date daily average. So turnover remains a feature of this market, and we still almost have an entire trading session left. The other thing we're tracking is this merger, of course, between these two massive brokers, the proposed merger, swap deal, and based on the terms of that deal, plus the rally, plus the premium, we're getting now double-digit gains as some of these stocks resume trade. We were up as much as over 100% at one point.
Yeah, so we pare back a bit, but we're still talking about 80% gains for Haitong Securities here right now. You take a look at how the rest of Asia is looking like ex-China, and it really is kind of following some of the tailwinds that we saw in the U.S. overnight after the S&P set its 44th record of the year ahead of that CPI print. May not be as important this time around, inflation, than the labor market sort of data that we got of late here, but it's enough to keep at least equities at a slight bid here this morning. But we're watching the dollar very closely, right? So we've steadied a little bit, but we've been seeing 8 days of straight gains for the Bloomberg Dollar Index, which is the longest streak we've seen in about 2 years. That's why you're seeing dollar yen at 149 levels right now, a 2-year yield in the U.S. at 4% as well. So that's one to watch. And of course, we're still waiting, about 2 days away from what we got this announcement yesterday, that the finance ministry in China is going to hold a briefing on fiscal policy this weekend as investors clamor for additional measures to stimulate the world's second biggest economy. Let's bring in our China correspondent, Min Min Lo. She joins us now. How high of a bar is it there now for the finance ministry to deliver, to at least convince the market that they're still on this reflation path?
Yeah, it looks like markets have already priced in about 2 trillion yuan in this additional fiscal stimulus. So anything below that might disappoint investors. Citibank is expecting 3 trillion yuan. But Morgan Stanley published a note saying that we could see maybe just a supplementary fiscal injection for the remainder of this year, and that size could be modest. And if the PBOC briefing is anything to go by, we might not see a big headline number. It could be small incremental batches to the tune of 300 billion yuan or 500 billion yuan for a start, and then with promises of more to come if necessary. So that could be a possibility as well. And of course, we're looking out for the composition as well. How much of that funding is going to be dedicated to boost consumption? How much of it to bolster local government financing and government-led investment? That's key to watch. And also, if there is going to be a mid-year revision to raise the fiscal budget deficit to GDP ratio, I believe the State Council still needs to get that approved by the legislature. So maybe that may only come after the NPC Standing Committee meeting in late October.
Yeah, and as you're just talking there, the rally is continuing here across the bond market. So after a period of reflation, we're now down to about 2.15% on the 10-year bond yield. The timing of this is interesting too, following, I guess, the price action in the markets yesterday.
Yeah, following the price actions, as you said, it's like the Avengers coming out one by one, right, from the PBOC and then NDRC and the MOF. And also the fact that it is on Saturday, there's a lot of market chatter now that maybe they intentionally plan this when markets are closed to avoid the sort of wild swings and volatility that we're seeing, to give investors some time over the weekend to digest this before markets reopen. That's just market chatter that's going on right now. And by the way, Saturday is a working day in China. It's a compensatory work day because of the Golden Week holiday. Yeah.
Yeah, but I think markets are closed, right?
Markets are closed,
yes,
but
okay.
it's working day.
But people will be at the office.
Yes.
For investors, though, sleep on it, right, as they say?
Yeah.
Or take 2 nights. All right, Min, thank you so much. Min Lo there, our China correspondent, giving us a preview of what to expect ahead of that Ministry of Finance briefing. We were just talking about CGBs right now. Yields are pushing down across the curve, so your 2s right now, 146. Your 30-year yield is at 2.34%, so extremely tight spreads. And really, we're seeing money coming out of the credit markets in China as retail investors are trying to fund their war chest in case they do need to deploy further cash into the equity market. We've seen a massive melt-up in credits and yields onshore, particularly across AA and junk. Does this continue? Ting Meng, Senior Asia Credit Strategist. She's with ANZ. She joins us over the phone right now to talk us through. Ting Meng, good morning. And Yvonne and David here. Thank you for joining us. So what do you make of these moves in the credit markets? Can the pain and these losses continue in credit, you think?
I don't think it's sustainable. So the stimulus just announced by the Chinese government lifted sentiment, and the investors are chasing higher risk. And the sell-off in bond market is going along with the surge in stock market, as you said, which is obviously a seesaw effect as investors shifting their exposure from bond market to equity. And I think the dramatic shift has already happened. Stock price has surged too dramatically and too fast, and we could see some consolidations at such level as investors gauge the policy implementation and the sustainable of this stimulus. For bond market, China is still in the rate cutting circle with efforts to reduce financial costs for real economy, and the liquidity will remain ample in midterm. So I don't think this sell-off will last long in bond market. And the bottom line we need to consider is the overall economic growth, which is still under pressure. And most of all, we need to see the stabilization in property market.
Can you put into perspective for us, Ting Meng? Do you think that what we saw yesterday, this massive sell-off, did it actually make these junk bonds more attractive when it comes to potential returns or inflows, or less?
I think such a level from the longer term perspective, it's quite attractive. As I said, I think the long trend is still for rates to going down, and that will drive credit curve yield down as well. But in the short term, the market is quite volatile, and we need to see some consolidation at such levels in the short term.
Okay, and is there anything you've heard, Ting Meng, from officials recently, this series of stimulus measures that has any major investment implications at this point in time? What's the advice you're giving right now to your clients?
I think currently the monetary policies is still quite encouraging, and that exceed the investors' expectation. And those liquidities input into the market and the system is the main driver for investors looking for more risk assets. And on the other side, I think we still need to see the fiscal policies coming out with more details, and as well as those on property market. There's some announcement in the Tier 1 cities easing the restrictions. However, I don't think that is the turning point for the overall property market.
All right, Ting Meng, we gotta leave it there. Thank you. Senior Asia Credit Strategist joining us out of ANZ in Shanghai. Coming up next, we're going to hear why JPMorgan thinks the recent China market rally reflects a trend of valuation re-rating. We have more to come. This is Bloomberg.
I would say two. From the offshore perspective, Hang Seng Tech Index will be one because they are basically have a lot of the internet and platform companies that are in the offshore market. In the onshore market, I probably will focus on CSI 500. That's basically focusing a lot of more the mid-cap, because in the large cap space, there's a lot of the SOE banks and oils companies. They are good, but if there's a reflation that the market is expecting, they will be going for growth.
And that was Louisa, who joined us earlier on shows, a China equity strategist at Bank of Singapore. Going into the open today, we were looking at gains, and now the CSI 300 has now turned negative, 0.1%. What are the shorter term and longer term opportunities in this Chinese market? Sylvia Sheng, global multi-asset strategist at JPMorgan Asset Management, joining us right now. What kind of questions are you guys getting from clients these days?
I think a lot of questions mainly center around the scale of the stimulus. People are interested in how big that will be and also how sustained this rally is going to be. So really it's from that perspective, and also reading through to the spillovers potentially to other major markets.
I mean, everyone's scratching their heads about whether we're going to get enough of a fiscal package. Is it going to be enough to keep this rally going? I mean, have you been convinced, at least at this point, that we're seeing that policymakers at least are serious about reflating this economy now?
I think that change in policy reaction function to something that's more aggressive and coordinated, we definitely have conviction in that, as we have seen from the Politburo meeting, from the coordinated action so far. But what we still need more details on is really on the size of the policy support. I know we're all waiting for the Saturday's press conference to get a bit more detail of how much we're actually getting on the fiscal side.
Is there a number that you think will impress these markets? And I think the other side to the question is, do you think expectations have now run up a little bit too high over what any announcement could result in shorter term for the economy?
It does seem to me that the base case is probably around 2 trillion in terms of what they're going to announce this time. So I think anything above that could be quite upside surprise. Obviously, it still depends on what they signal as more. Is there more to come? That will be very important to watch as well.
Yeah, and tell us a little more about how you're positioning around China now. You said you're turning more positive on the outlook. You've also increase your conviction on EM overall to overweight. Is that part of the whole what we're seeing in China too?
Yeah, so basically when we look at EM before kind of the whole policy announcement 2 weeks back, the drivers of our conviction in overweight in EM, it's more from the EMX China part where we see that play through from the AI theme, the tech theme. But now we have one additional driver, which is the policy easing coming through from China. So that's how we're seeing it.
What parts of EM do you think take a back seat if the rally continues, if the re-rating continues? Like, what are the markets I should be fairly cautious on at this point?
So I think actually the general environment should be pretty positive for all EM markets.
Okay.
If we think about the global growth is pretty constructive, and we have that monetary easing coming through from almost all the major central banks. So I think that's a pretty bullish setup if we look at EM overall.
I think if we look at year to date, or at least what we're looking at year end, China is coming back, but do you think it's going to come back to be as good as the U.S.? I mean, this is an equity market in the U.S. that continues to go from record to record. And does it need a Fed to cut another 50 basis points to keep this rally going?
I think with regard to the U.S., our kind of main convictions really on the earnings side. We're still expecting pretty solid earnings growth, even when we look out to the next year, because we think growth is going to be around trend. Actually, if you look at the latest numbers, probably above trend for Q3. And we have that financial conditions easing. So we think it's still very much an earnings story. If they cut further, that probably reduces that recession risk even more.
6,000 on the S&P, do I see that soon?
I think if we get to that level, probably we do need to see a bit more valuation expansion as well.
Okay.
Could potentially come through if we have more positive earnings results this season, and if we have more positive sentiment around AI.
We were talking about bonds. I mean, we had a guest yesterday that said, look, the fact that we're heading into a U.S. election doesn't matter who wins. You're going to see budget deficits blow out in some way. Yields are still going to tick higher from here. You add that to the Fed discussion that, now they're saying, there's been a pushback on whether we could see another 50 basis point cut from the Fed. Does that establish a floor, you think, for the Treasury market here right now?
I think if we look at the Treasury yields, obviously what's happening on the Fed side is important, but also we just do see cross currents both from an inflation perspective and growth. Growth has been resilient and probably surprising to the upside, but we have that moderation in inflation. So for now, we're neutral duration because we think there are cross currents pushing both ways.
How do you feel about Japan? I know you've been bullish on Japan. You still are?
Yeah, we still maintain our constructive view on Japan. We think fundamental is very solid. We continue to see pretty solid wage growth coming through. So that reflationary theme, I think, is very much intact. I know there's some worry about the yen, but so far we're seeing this depreciation coming back.
And how concerned should we be about what the central bank does there? I mean, can they sneak another rate hike this year? Would that matter to you in any way?
Our basic case is that they don't go again this year. We do think they will go again next year in January.
This is the BOJ, right?
Yeah, the BOJ.
Okay, for a moment I was talking about the Fed. Come on, you're giving us headlines here. Okay.
We just think that they probably need a bit more information on the profitability and the wage hike next year to really have that conviction for another hike.
Okay. Sylvia, fantastic. Thank you so much. Sylvia Sheng there, joining us here, global multi-asset strategist at JPMorgan Asset Management. As in a matter of 6 minutes, that interview we just had, the CSI is now down 1%, about 50 minutes now into the session here. Although we are getting a rally still in Hong Kong as we enter this long weekend. Although, on that note, we're also coming off highs of the day. So, stay with us. We'll see you on the other side of this break, and these markets might look different in about 2 minutes' time. Stay tuned. This is Bloomberg.
We've already directed the Department of Defense to be ready to provide active duty service members to support Florida after the storm surge if Governor DeSantis requests the help, which I expect he might, just like we did North Carolina.
President Joe Biden there speaking earlier, and of course has been tracking Hurricane Milton making landfall in Florida just a few hours ago, and we continue to watch what's been, quite graphic, right? Extreme winds. We're talking about flash flooding to continue as the storm moves inland. We're also hearing more than 1 million homes and businesses are now without power. They've made that declaration for many, I think millions, up to 6, to evacuate their homes here right now. But yes, you're seeing a lot of that wall of water hitting onshore right now this evening in Tampa.
Yeah. In case you're just joining us, just a couple of things we know about this. It's a Category 3. It's become a Category 3 as it made landfall. That means we're looking at about 120 miles an hour winds. A lot of conversations and warnings around not just so much the winds, but the storm surge, which could reach, I think, 13 feet in some places here. Extreme winds, flash flooding continue there. As Yvonne is pointing out, in terms of the power disruptions, more than 1 million customers are without power in Florida. That's according to Power Outage US. And in terms of the estimates of what the damage could be here, Enki Research puts that at between 60 billion to 75 billion. Of course, we'll need to wait and see. And, Yvonne, we were talking about this earlier. This comes just weeks after a fairly strong one, of course, also made landfall.
Yeah, it's devastating. You hear from the likes of Duke Energy, and they were saying they only had 24 hours between the final restoration of Helene and preparing for Milton.
Yeah.
And they were just talking about how they replaced hundreds of transformers destroyed by Helene 2 weeks ago. And here you're now talking about infrastructure that's going to be vulnerable once again. And the cost, as you say, could continue to rise. But we're certainly watching very closely of the support that's coming through here. Florida Governor Ron DeSantis saying more than 50,000 linemen have been put on standby for the state and ready to start power restoration as soon as it is safe. Joe Biden also saying the federal government ready to deploy military personnel to aid in these recovery efforts. All right, we'll hold that for now. We'll continue to give you updates, of course, as we continue to watch it. In other world stories that we're tracking today, Japan's Foreign Minister Takeshi Iwaya has asked China for a proper account of motives behind the stabbing death last month of a Japanese schoolboy in Shenzhen. In the first phone call, he told his Chinese counterpart Wang Yi uncertainty around the incident is worrying Japanese people in China. Beijing has also not explained the motives behind a June stabbing incidents against Japanese nationals.
Now, Japan's new Prime Minister, Shigeru Ishiba, has dissolved the lower house of parliament ahead of the national election on October 27. While it is unlikely that the ruling LDP will lose control of parliament, the scandal-plagued party may drop some seats. Now, Ishiba's surprise emergence as Prime Minister signals a bid by the LDP to strengthen support by turning to a leader with a cleaner image. Now, Citadel Securities CEO Peng Zhao says, well, he's not currently considering an IPO for his company. Speaking with us at the company's global macro conference, Zhao discussed the growing reasons why his firm and others in the U.S. are, for now, choosing to stay private.
We need to see more IPOs, okay? And we've seen way fewer IPOs than we used to. And the leading reason companies are no longer going public is, on the one hand, they find it easier to raise capital privately. On the other hand, the negative side effects of being a public company as a result of regulation like the ones you're mentioning that's happening to go right now, it's giving people longer and longer pause. Right? Until that changes, it probably also means next time when you try to ask me, when you ask me whether we're going IPO or not, the answer will continue to be no. So, so from that perspective, we remain concerned about the overregulation and this negative attitudes towards corporate America.
I hadn't thought about it that way. You take companies public or help take companies public, and you're privately held yourself. What are the challenges? How do you think about that as somebody who is such an integral part of the capital markets? What is the biggest issue of companies not going public for longer?
It used to be whether that we are not being a public company or this was covered as well. We are not a primary dealer in U.S. Treasury markets. Our counterparty used to use things like, hey, are you a publicly traded company? Are you a primary dealer? As a way to qualify us as their counterparty. And increasingly, given our sophistication, given the changing market structure, and frankly, given our track record and the level of service that we have been able to deliver, we're finding that becoming less and less relevant in our clients and in the market's mind. Right? We transact with the largest financial institutions in the world that have the highest standard when it comes down to who they do business with and who they don't. Whether you're a central bank, you're a sovereign wealth fund, you're a large pension, chances are we are one of your biggest counterparty, if not the biggest. And without us being a public company or a primary dealer, quite frankly.
And that was the Citadel CEO, Peng Zhao, there speaking with her colleague, Sonali Basak. We have plenty more ahead. This is Bloomberg. All right, we're getting close to that lunch break in Tokyo here as expected. And you take a look at what is going on. And yeah, it's the weakness in the yen that's really helping, I guess, a little bit when it comes to the Nikkei 225. But yeah, just marginally higher here this morning, of course, as we count down to that U.S. inflation print, which could have some implications on dollar yen the next few hours or so, Dave.
Yeah, if you just joined us, JPMorgan Asset Management, Sylvia Sheng actually emphasized that they're still very bullish on this Japanese equity market, apart from still remaining overweight with a preference for U.S. equities. Okay, just food for thought as you look at these asset allocation implications of a Chinese market that has come alive. Certainly as far as turnover goes, I think we're about an hour into the session. I haven't looked at the numbers, but I can almost guarantee you that turnover onshore is likely already above the year-to-date daily average. I've counted at least 8 direction changes in the CSI 300 already about an hour into the session. We're now up again for the day, as much as we were down as much as 1%. So again, we'll continue to track these markets. What's taking place underneath the hood, though, some corporate news. We now have the terms of this merger between the two, Guotai and Haitong Sec. You have the 2 H shares resuming trade today. We were up as much as over 100%. And so, yeah, let's talk about the pricing, why we did see that massive pop, and what this means moving forward for the competitiveness, of course, of this combined entity. Bloomberg Intelligence thinks, of course, that shares being issued to support the merger could actually dilute the combined firm's book value. Sharni Wong, our senior analyst, is here with us to talk us through what do you think was behind that massive move? Asking, I guess, a fairly obvious question, but yes, go ahead.
Yeah, so yesterday they announced the share swap ratio. Yeah. You get, for every 1 Haitong share, you get 0.62 Guotai Junan shares, right? So in Hong Kong, we saw the H share pop because Haitong, it was trading at a wider H share discount versus Guotai Junan Securities. So that's why we've seen Haitong share price rally a lot faster. And then going forward, you know, Haitong, it should trade at around 62% of Guotai Junan share price, minus a discount for the risk that it doesn't go through because it's still subject to approvals.
That's right.
Obviously, we've seen a lot of optimism. It's a lot to do with the catch-up. It's a lot to do with this dilution. But you know, once this merger is said and done, what do you think is going to be the competitive edge that these brokerages are going to have once they get married?
Yeah, it's actually very important that they do this. Like, they're both Shanghai-based firms, and the regulators, you know, they've pretty much said we're only going to prioritize 2 to 3 for overseas expansion, you know, to rival those in, like Goldman or UBS. And by rival, I don't mean like go out everywhere, because that's impossible. Like, they're more talking about, you know, what are the next steps, right? So it could be Southeast Asia expansion, where, you know, they can follow their corporate clients overseas. So for Guotai Junan and Haitong, when they merge, they will overtake Guotai Securities and also CICC Securities by overseas assets. So this puts them in second place behind CITIC. So it is very important that they merge.
Does this usher in potentially more transactions and mergers, given that, to your point, right, there's only a very few number that can actually go overseas and compete competitively against some of the global peers, for example. So how are you looking at potential mergers moving forward? Yeah,
so we think it's the tip of the iceberg. There's definitely more in the pipeline. You know, we don't know exactly which ones, but, you know, like, media reports, like, for example, China Galaxy, CICC have been talked about a long time ago. In the past, it was CSC Financial together with CITIC Securities. So I think, you know, this is just the early stages, and we've already seen a lot of medium-sized securities firms as well merge.
You mentioned this is still a proposed merger because it still needs approval, and I'm just trying to gauge how big of a risk that it doesn't go through, given that this is, of course, a fairly encouraged, correct me if I'm wrong, encouraged by regulators themselves to get bigger.
It's been in the works for some time. As we saw, with the privatization of Haitong International, I think that was the first step because Haitong has Haitong International, Guotai Junan also has Guotai Junan International. So it's something that they've been planning for a long time, and they likely have the regulatory support. But I guess for shareholders, it seems to make sense. I mean, look at the share price today, right?
Yeah. What are the sort of synergies that you see with these two merging, right? Do you think that they complement each other? Which one is it better for one brokerage or the other? I mean, what are the synergies that you see?
I think it's good for both of them. So historically, Haitong hasn't done very well over the past couple of years because of the Chinese bonds, their exposure in Hong Kong. They've been loss-making for quite a few years now. But Guotai Junan, they've always been AA rated. Really good risk management track record. So I think Guotai Junan can leverage their expertise to help Haitong out. And going forward with the scale, they're both based in Shanghai. They'll have that competitive edge to compete with Haitong Securities and others. Yeah.
Great stuff. Shani, thank you. Shani Wong.
Thank you.
Perfect to have on today, just given the price moves there. Our Bloomberg Intelligence senior analyst, Shani Wong there. Well, Japan's Yomiuri is now reporting that Seven & I will establish a holding company for its non-core subsidiaries and under a restructuring plan to focus on its convenience store business. And the company also reports earnings later on today after Bloomberg broke news just yesterday that Couche-Tard had increased its buyout bid to $47 billion. Our senior editor, Reed Stevenson, joins us now again. Reed, I mean, maybe tell us a bit more about, we're hearing a lot of news flow about what this restructuring plan is going to look like. What more do we know at this point?
Indeed. I mean, today is kind of like a culmination of everything we've seen since August 19th, when news of Couche-Tard's interest in Seven & I became public. And since then, really we've seen a trickling out of various types of news. Seven & I itself looking to restructure by shedding core assets and just kind of convince investors that it's going to focus on its core business of convenience stores. And then amid that, just a day before earnings yesterday, we got news here at Bloomberg that Couche-Tard indeed sent another higher proposed price to Seven & I, valuing the company at 7 trillion yen, about $47 billion. And again today, the shares have come in kind of steady, but really the focus is going to be on a couple things, mainly the profit outlook. Analysts are expecting a slightly lower number than the company itself is. And then also the details of all of this restructuring talk we've heard. And so after the numbers come out at the market close here in Tokyo, we are going to get a news conference by CEO Ryuichi Isaka, and it will be his first time fielding questions ever since all of this came to light.
Yeah, and might all the news flow recently affects any potential revisions to their outlook, Reed?
Well, I mean, the underlying business itself has seen some bumps, both in the convenience stores in the U.S. and in Japan. Same-store sales have also shown signs of weakness. So, I mean, there's a broad sort of understanding that, the business itself is facing some headwinds. But obviously, I mean, the timing is just not very good. You do not want to be talking about the weakness in your business when you're facing a buyout proposal that you really don't want. And so, the onus is on management to sort of justify a higher price for the company, either through their own actions or really engaging with this proposed offer from Couche-Tard. And so really a lot of moving parts, and we're just going to have to see how the company reacts. The one thing worth noting, though, is the shares right now are in fact trading below the indicated price from the Canadian retailer and owner of Circle K stores. And so there is still a lot of doubt as to whether this is even going to happen at all.
Oh, okay. Keep us updated, Reed. Thank you. Our senior editor, Reed Stevenson, there joining us live out of Tokyo. And we're going to go from Tokyo to Taipei. These live pictures coming through here on National Day. We're hearing from the Taiwanese president, Lai Ching-te. He is speaking now in the city. And, of course, this is his first National Day address. It looks like, well, according to our sources, that he was going to point to a range of tactics used by Beijing recently and preparing to sound a warning about China's plans to exert more pressure on the island. And so certainly that's what we're hearing here, or we're expected to hear, but we'll see if we actually get it here as well. But certainly that's why we're seeing Taiwanese markets shut here today, Dave.
Yeah, absolutely. So this, I believe it started a few minutes late, perhaps. So we'll get you guys an update. We do get more headlines coming through here out of the president's speech there. The conversation certainly is, I think, on Wednesday, the detection of, I think, how many was it, 20?
Yes.
Incursions across the median line here in terms of, and, you know, the color this also actually brings to geopolitics ahead of the U.S. elections, right? So Taiwan is a flashpoint between the two, the semiconductor conversation right now. So the significance of what we'll hear, while it is a domestic audience, it still obviously reverberates and has implications globally as we try and map out what the next couple of weeks looks like going into the U.S. elections. Well, okay, we'll leave that there for now. Plenty more ahead. This is Bloomberg. Okay, we're looking at a resurgent equity market in Hong Kong following, I think, almost 2 days of fairly sharp declines. And maybe that's the reason we're seeing a 3% pop on the Hang Seng Index, a resurgent Hang Seng Tech up about 2%. But certainly we're nowhere near levels before the sell-off took place. We were down 10% and then a further 2 or 3%. So going into the long weekend.
Yeah, you know, it's interesting, right? This whipsaw that we're seeing, and it just goes to show how jittery this market is and how long can we actually wait. I mean, we still have another 2 sessions in mainland markets before the Ministry of Finance actually has this briefing. And we rarely hear from the finance minister, landfall on there. So, I think Robin Sheng from Morgan Stanley did say, the bar is quite high for the Ministry of Finance to really deliver on anything this weekend to convince this market that they're still on this path of reflation, this whole pivot that they've seen. And they said, guidance is very, very much key here because you kind of have to highlight a little bit more whether there is this guidance of are they going to raise the budget deficit for 2025,
right?
The number of special government bonds are going to issue, the like here. So it's beyond that 2 trillion, I think, renminbi consensus number. That seems to be what people are hoping for right now.
At least 2 trillion.
At least, but I think that we need a little bit more than that,
right?
To just given how these markets are reacting right now.
That's interesting because I think a few days back, officials have come out. And I think the headline essentially was, the government economic policy needs to also take into consideration market expectations, right? So it's been not just a pro-growth stance, but a pro-market stance, And an example of that, I think, is the PBOC, that announcement as we were preparing for shows today, that the swap program was taking effect today. And this dance between market pricing, market narratives and commentary, and what I guess officials are figuring out what that script should actually look like. Is it going to be increased fiscal stimulus? Is it going to be increased an acceleration of government spending? I think our guys at Bloomberg Economics now think that monetary policy will need to take a back seat now, and it's really going to be fiscal that might help re-rate this market even further.
Yeah. And are these expectations just unrealistic at this point? I think Chang Shu said, I think it's just speculation has just run wild. We'll leave it there, but we're going to talk a little bit more about that in just a second, give you an update on how markets are doing. But we're also looking out for something else later on today. Tesla taking the wraps off its long-delayed robotaxi later on today in a high-stakes presentation for the EV pioneer. Now, Tesla's new product will face tough competition in China, though, where self-driving taxis have moved beyond trials and onto public streets. More from our chief North Asia correspondent, Stephen Ingles.
Already dominant in their home market, Chinese EV makers aim to lead as well in the self-driving realm, from advanced robo-taxis to larger semi-autonomous semis.
The game for autonomy is in China. That's why Elon wants to roll out his own FSD there.
Tesla, along with its Chinese navigation partner Baidu, plan to make FSD, or full self-driving, available in China by as early next year, pending final regulatory approval, after getting an in-principle okay from Beijing in April.
It's a watershed moment, and this unlocks a golden opportunity.
At least 9 domestic Chinese automakers, plus smartphone giants Xiaomi and Huawei, among others, have a head start, though, locally through real-world traffic pilot zones in multiple cities across China, seeking a leg up in so-called ground truth data.
At the moment, the local knowledge gives them the advantage because, again, the scale. The scale is uncompared to anywhere else in the world. But as Tesla leans on that scale, as you mentioned with the Baidu cooperation, that is slowly going to be eaten away over time. And unless they can also do that kind of data gathering outside of the country, Tesla will at some point not only become competitive, but may ultimately become a market leader.
I think Tesla's full self-driving is great. I like it too. But FSD's breakthrough only took place in the past 12 months. I think Xpeng's XNGP and Tesla's FSD can both perform well in the global market.
Tesla is indeed a pioneer, but everyone is beginning to get closer. Chinese car companies have a better understanding of the needs of Chinese users and the needs of China's road conditions.
This is a pretty narrow road. You can see all kinds of different scenarios like bicycles, pedestrians, vehicles cutting in, cutting out.
Toyota partner Pony AI has been real-world road testing its robotaxis for more than 6 years. So we hailed a ride in Beijing.
Tesla's FSD coming into this market, is it a threat?
It's definitely a good thing. More competitive this market is, it means the better products will be offered to the customers. We need to have the customer acceptance. That is very, very important. The customers have to trust this kind of technology.
Oh,
whoa, wow, what happened?
Somebody pulled out suddenly.
Oh.
The brakes work.
Safety and certainty are clearly important as well for another electric vehicle industry in China, in the so-called low-altitude economy that includes airborne EV delivery of packages and passengers. Haitong is perhaps the most well-known of the Chinese air taxi makers, but Volant Aerotech 2 hopes to have its $2.5 million VE25 certified by mid-2026 as China opens its lower airspace to piloted and pilotless eVTOLs, or electric vertical takeoff and landing aircraft.
There's a huge potential in this area.
Electric vertical takeoff and landing commercial drones come in many shapes and sizes, and they are throwing lots of money at it.
So much so that at least 20 provinces say they intend to build out their own low-altitude economies.
The vehicle itself is carbon fiber, and it's generally produced all domestically. The battery ecosystems which they use are here. So all of the ecosystems and manufacturing is already located domestically. So that actually gives it a huge edge over any competitors.
Now is a little bit challenging time between China, Europe, and the States. I think it's important to have the communication and not afraid of everything. We are trying to build this aircraft for the world.
The next real test for autonomy, both in the skies and on the roads,
It's slowed down.
will be to see whether customers are afraid or not to get on board. Stephen Engel, Bloomberg News, Beijing.
At least that's going in a straight line. These markets, as you can see, have changed direction at least 10 times. CSI 300 on your screens. In terms of market breadth, still largely positive, about 200 on the CSI 300 are trading higher. What I want to point out, though, is this trading range, right? We opened at about just below 3,000, well, just below 4,000, and the range has been over 100 points, which on the scale of the CSI is actually quite wide as well. We were down as much as 1%. The other thing I want to point out is when you look at volumes, right? There you go. 18 billion so far. On average, daily gets you about 12 billion going into this rally. So we're already above the daily average year to date. That's volumes. Turnover is the other thing I want to point out too very, very quickly. Again, we're barely an hour or 90 minutes into the session now. Your year-to-date daily average is 800. We're already right now at 1.1 trillion. So, Yvonne, the narrative that it's going to be volatile, but prices and liquidity is back, that continues to remain the case.
Yep. Let's get more from our Asia equities reporter, Winnie Xu. She joins us now. Winnie, we were talking just earlier about the flows that we're seeing across ETFs, whether it's one of the inverse ones or the ones that are more bullish. And you're basically continue to watch that, we're looking for direction, really, of where this equity market is going to go next. What is your team looking at today?
Right. So volatility really is the big thing. And I think that, whether it's our team or the market, investors, all eyes are now on the briefing that's going to happen on Saturday by the Ministry of Finance. So, just yesterday we saw that when the announcement just happened, the market went up, and then it just kind of paired the gains right after. So there is that excitement of what's going to come from the briefing, because this time it finally involves the person who can make a decision in terms of how much we might get from the fiscal policy and fiscal support. But the question is that we are still quite uncertain how big the package is and how fast or how the government is going to implement that. So questions that investors have been asking is what's going to constitute of this package that's going to come out and how big it is. Some are saying that if it falls below expectation, so if it's just 1 trillion yuan, then we might see further sell-off. But if it's above 3 trillion yuan, for example, then we can see the market to pour in more money. So it really is to understand which direction or how big the package is.
Yeah, Winnie, I'm sure your inbox is almost as busy as ours and getting inundated with all of these sell-side calls coming in. Broadly speaking, these last 24 hours, what sense are you getting from the sell side on investment advice at this point in time?
Right, so we are definitely hearing a lot of calls for kind of joining this China rally. Just today, we got a note from Bernstein actually downgrading, Bernstein's quant team actually downgrading Indian stocks to underweight, citing that the valuation is too high. But they actually turned even more positive on Chinese stocks because they expect more policy to support the market, and the valuation still looks attractive. And they mentioned some of the high volatility stocks might be quite attractive for Chinese market.
Okay.
All right.
Winnie, thank you so much. Winnie Xu there, our Asia equities reporter. And yeah, we'll let you go. I think it's a busy day for you and your team yet again. Plenty more ahead. Markets are bid right now, and hopefully they will continue to remain bid. A live look at Lujiazui in Shanghai, the financial center there. Plenty more ahead. This is Bloomberg. Okay, we should be hitting session highs right now on the Hang Seng Index, the 3.3%. I mean, the hedge funds are busy given all these swings here.
Yeah, I mean, there's an interesting report out from Goldman that was talking a bit about after the NDRC meeting. And in fact, they actually recorded record single-day selling in Chinese equities on Tuesday, most of which 3/4 of that selling was driven by the A shares. The rest was H. So you're starting to see even the hot money tap out and maybe even start to increase some short positions too.
Yeah, they're taking advantage. I mean, it's a trader's market right now. And if you get a move like 8%, certainly you'll take profits. Yeah, it's going to be busy yet ahead. This is Bloomberg.